Good morning and welcome to this weekly market update from MRC Markets. Today is the 16th of June 2014. What we'll do today is go through some technical analysis on euro dollar, cable, dollar yen, dollar Swiss, Aussie and gold, and gonna have a brief look at Forex calendar as well. I will not make any trade calls recommendations in this video. You do trade at your own risk. If you could please read our full disclaimer, which is on our website, www.mrcmarkets.com. that would be appreciated. For any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is 100 simple, and the gold is a 200 simple moving average. Okay, let's have a look at the Forex calendar for this week. What do we have going on? Today, no high impact data, although we do have the Eurozone CPI year on year coming out at 10 AM, this is GMT. Tomorrow overnight, you've got Aussie monetary policy meeting minutes. Tomorrow at 9:30, you've got UK CPI, 10 AM German ZEW economic sentiment. At 1:30, the first sort of US high impact data with the building permits and CPI there. Wednesday at 9:30, more UK data, so the MPC asset purchase facility votes and the MPC official bank rate votes. At 7 PM on Wednesday with the FOMC, and at 7:30 FOMC press conference as well. On Thursday, quite a bit of Swiss data at 8:30 AM, and at 9:30 more UK data, sort of retail sales. And then at 1:30 at the standard US weekly jobless claims. At 3 PM got the Philly Fed manufacturing index. And then on Friday have some overnight Japan, we've got Bank of Japan Governor Kuroda speaking. And at 1:30 we have some Canadian high impact data, sort of CPI and retail sales. So quite a quiet week, to be honest. I mean, there are some high impact bits each day, a pretty standard week. Although then again we do have FOMC and UK MPC stuff coming out, so there should definitely be some movement in the markets. But yeah, it's just pretty much standard week in terms of data. Okay, then let's have a look at the Forex calendar. Not the Forex calendar, let's have a look at the charts. So we've got the euro dollar. This is the weekly chart here, and what have we been talking about in terms of this weekly? It's just been sliding and sliding. I remember saying last week's weekly candle was quite interesting. I mean, a lot of people say it was a reversal because there's a lot of lower wick on that. But remember, we did have that upper wick on that candle, and interestingly, we had a weekly close below this 50 week moving average here. So in terms of fibs, I mean, I don't normally look at the 38.2, but I think I tweeted this on Twitter. We're currently sitting just above the 38.2% retracements. This is the fib from 2013 low to the 2014 high, and the 2013 low is the 50% bounce off of this previous move here from that sort of 2012 high to low. So you can see this sort of zone here. So that is the low of the bounce. So that's why we're using that one. So yeah, I mean, this is the key line in the sand for the week, really, with the 135.20. It's currently sitting right on that. I'd not be surprised to see it break lower, to be honest, and come down to the sort of the healthier 50% retrace. And we do have the 200 week moving average there as well, but there's nothing stopping this reversing and going towards the upside here. Especially, we've had quite a few down weeks on the trot. I mean, yes, that was a green candle there, but it has been sliding for quite a while, so we could get a brief pop up. And if we do get a bounce off this level, then this is definitely the counter fib move here. I'm going to delete the 38.2 for now, and the 88.6, I just don't want to go on there. So yeah, the 50% here comes in at one spot, 37.47, and that coincides with a nice round number, which is 137.50s. So keep an eye on that. So they're the 2 fib moves, and that's pretty much it in terms of the weekly. The daily, still the same fib move there. You can see we're currently getting some support off of, I think it's about 135.20s here. You can see this is what we're currently sort of getting supported off at the minute. So that's the key sort of support in play. I mean, you can see how it coincides obviously with that 38.2 retrace, but you can see that clear there on the daily, and that's pretty much it. I mean, in terms of the 4 hour, nothing major of interest. I personally, well, I mean, obviously if you're scalping, keep an eye out on the round numbers In terms of the key moves and the fibs and stuff, that's the only fib I'm personally interested in on this daily. To be honest, I wouldn't be surprised to get some sort of reversal for this today, and we get some sort of bounce up. And then, of course, you've got the 200-day moving average to keep an eye out there for first sort of resistance if we do bounce. Cable on the weekly, very bullish week last week. And remember what we were talking about on this weekly chart. These two small fibs here, you can see them clear on the dailies. With that small one there, this was the low of the year to the high, you remember, and then we had a lovely retrace, lovely bounce of the 61.8% retracement, and then we've extended the fib higher and taken this next bounce there, and bam, off that 50% lovely reversal candle. And last week we flew up to the upside, and you can certainly currently see that we're catching some resistance at this 0% line, which comes in at the one spot 69.96, so we'll call that the 170 handle. Nice round number there. So that's the key resistance in play. So if you flip it down towards the shorter term time frames, you can see here on this daily we've had a nice spike up today. It's testing it, and we're currently coming down. So keep an eye on the daily candle close today. Could be a nice reversal candle, and we could see some sell off for the rest of the week. And if we do, then keep an eye on this 50-day moving average, and the aggressive fib players who think we're going to keep on getting a pop towards the upside. I personally take this sort of low here. I mean, you could use this low here. There's nothing wrong with that, but I personally take this low here because that's where we came off of this previous fib bounce here. Remember, that's the low there. Well, it's the low. It's the recent swing low, really. So, in my opinion, so in terms of the daily, I'd be looking at that one. And in terms of the 4 hour as well, it's pretty. I mean, yeah, you could take that one there. But the best thing to do is just to keep an eye on the price action, see what happens, see which one works out best. We could get a nice reversal off here, and then it could rip up, but it could keep on breaking down, and then we want to come down to this sort of 50% or 61.8, and then we get a reversal. So I'm just going to take this 78.6 now. I don't massively look at it, not on these videos anyway. Okay, then that's cable. Nothing. Actually, no. One other level to keep an eye out for. Another reason why I think this fib could be useful is because this 50% does line up with a nice round number at the 168.50s there. So it's another reason to look at that fib, I think, because it lines up with a nice round number there. So that is cable. Let's have a look at dollar yen. It's pretty much self-explanatory, to be honest. On this weekly, you can see we're just playing in between this sort of wedge pattern. Last week's weekly candle was a red candle, but we did have a bit of lower wick on that, so it could just be a slight retracement candle. And you can see here on the daily, so we've got this 101 support and then that trend line resistance. And what we were saying on that weekly, last week's weekly candle, a slight retracement candle, and I think that is correct, to be honest with you, because it's playing inside of a fib. So that's the retracement, that's last week's move. You can see we're getting some support here at the 50% currently on today's daily candle. So keep an eye on the daily candle close. It could be a nice reversal, and then we could get a continued move towards the upside here on dollar yen, perhaps towards these sort of 102.50s. We could see that this week. And then of course you then got the 103s, which is above the 0% line. So they're definitely the levels to keep an eye out for as well. I mean, keep 102 there as well in terms of your sort of shorter term play, because that's where we're currently sitting, just below at the minute. Okay, let's have a look at dollar Swiss. So this is the weekly chart. What have we been speaking about the last sort of few weeks? So remember, we had this lovely bounce off of this 0.87 handle, and that's rotated towards the upside. And we did speak about this reversal candle last week, but it didn't quite test a 50-week moving average here. So I said keep an eye on this week. I mean, it started on the Monday. I think it was already grinding high, and that's what's happened. We had a lovely sort of grind high candle. We're currently testing this sort of 0.90 resistance, but I think we've had a weekly close above that. Yeah, we have had a weekly close. You can already see that today's move, this 0.90 has already acted as some support. So we've come down, we've come back up. So you may see that clear, and I know it's acting that technically, but you can see that's definitely the key line in the sand, and I reckon that will act as support this week. So let's flip it back to this weekly. It's all about this 50-week moving average. I think it will test it this week. That sort of coincides with 0.90 50 level as well. But I think, yeah, it's just in grind higher mode really. I wouldn't be surprised to see a test of that, maybe even a break above and a weekly close above this week. So in terms of the shorter term time frames, nothing major of interest. It's all about the 0.90 and 0.90 50. If we look at the shorter term time frames, the 4 hour, we had a lovely fib move. Oh, what have I done there? We had a lovely fib move last week. So this was the low and that was the high. So we had a lovely uptrend retracement down to 50%, pretty much to the pip, and we just flew off of that. And you can see we test that the 0% line, which is the current resistance at 0.90. 11's there, multiple. We had 4 tests of this level, and we're currently sitting below. So keep an eye out on that. It could easily come back down and then perform a sort of a double bottom off here, and we'll keep on just playing ping pong with these two levels here. Aussie dollar on the weekly, surprise, surprise, no change here. We're just chopping in between this sort of 200 pip range to the 0.92 handle and the 0.94. I said last week, and because after that previous weekly candle, nice bullish candle, just continuation pattern, I would not be surprised to see a test at 0.94. We did get that test, made a weekly close below, so I'd not be surprised to see it this week just slide lower, to be honest, and then next week we may get a test of 0.92 handle again. So yeah, not quite interested on the weekly. On the daily, you can see we did have a sort of false breakout there, and it's closed below, but it's purely about this 200 pip range. Even on the 4 hour as well, just nothing much of interest. Just it's all about keeping an eye, see if we get any sort of tests off of these levels. In terms of fib moves, if you want to play a fib in between this 200 pip range, then this is the fib move I personally keep an eye out for. The 50% coincides with previous resistance there, so it could act as nice new support. And then keep an eye on the 0.93, because that's the sort of mid-range point. We could get some interesting price action off of that. We did have some nice resistance around here where I'm hovering my cursor over, so I'll not be surprised to see some interesting action there if we do get there. But yeah, in terms of the sort of the weekly and daily, well, in all time frames, it's all about those 3 levels really. So the 0.92, 0.93 and 0.94 there, and that's the fib to keep an eye out for. Interestingly, actually, that 50-day moving average coincides with sort of 50% and 61.8% retrace zone there. Gold on the daily is starting to get interesting now. We had this break of this sort of trendline resistance here, which was been playing out pretty much all year. So we've had the daily candle close and the weekly. Actually, no, we haven't had a weekly candle close above that. Well, we've had a weekly open above it, but yeah, in terms of the daily, we've had the daily candle closes. You can currently see that we're testing these key moving averages here. So we've got the 200-day and the 50-day moving average. In terms of the fib moves, it's quite tricky to spot an obvious swing high. I'm personally keeping an eye on this one here, because this is the high of 2014. So I'm just using that fib there. So from the high of 2014 to the low of 2000. Not the high of 2014. It's just that recent. I think it's the high of May there to the low of June. You can see. Yeah, I'm just keeping an eye on that just to see how the 61.8 plays out if we do get there. But to be honest, it's more about these moving averages really, and the sort of the round numbers. So, I mean, you've currently got 1280s. So we're currently hovering around the sort of 1280 marker here. Though we have had a 4 hour close below, it looks like we could get a daily close, a 4 hour close above, sorry. And it does look like we could get a daily close above as well. So you could perhaps then sort of keep an eye out this 50% move here. And we're currently sort of eyeing that, but it is tricky to spot a sort of an obvious swing high there. I mean, the obvious one really is this one here. That's sort of valid on the weekly there as well, and it's the high of the year to the low of the year. So I'll definitely keep an eye on that one, but we are a long way away from that. So, but yeah, I think it's 1280 is an interesting level, because remember, I mean, you could bring it up actually in terms of, because what I'm looking at here is these spikes here. There are a lot of spikes, and we couldn't get closes below for a long time, below these sort of 1282s. Well, I suppose you could bring it down there to 1280 spot 41, because that didn't have a daily close below that all year. So keep an eye on the daily close, the daily candle close today, because if it does close below, then it could start to retrace for the rest of the week. And if it does, then the fib I'd be looking out for is this move here, because that's the swing low there, and that is the swing high, of course, if it does halt at this level. Okay, then that's all for today. I hope you enjoyed this video. I hope you found it useful. If there's any other pairs that you want me to take a look at next week, then feel free to comment on the YouTube channel or send a tweet to our Twitter feed, which is at MRC_markets. I hope you have a great week trading, and I'll catch you next Monday. Thanks for watching.